Governor Ron DeSantis has proposed taking the Florida property tax bill down to a very specific number: 0. Most of the coverage coming out of the special session treats this as standard political maneuvering in Tallahassee, but if you look at the actual language on the table, it reads differently. South Florida broker Matthew Krinzman argues this proposal materially and permanently changes the cost of carrying a primary residence in Miami-Dade, Broward, and Palm Beach. For property owners down south, the debate over this bill is a strict financial calculation. If it passes, the math of Florida homeownership undergoes a massive revision. To understand why this relief is on the table, look at the recent collections. Over the last 7 years, the property tax revenue collected by local governments across Florida has nearly doubled, jumping from $32 billion to $60 billion. This chart maps out that trajectory, revealing that local tax collections are projected to reach an estimated $83 billion by 2032. The proposed relief targets ad valorem taxes specifically, the portion calculated directly on your home's assessed value. Essential service fees on that same bill, like solid waste, drainage, and fire assessments, stay untouched. The state is using this exponential revenue growth to justify immediate taxpayer relief. Local city officials are looking at the exact same numbers and sounding the alarm over how they will fund municipal budgets without that money. Right now, the Florida homestead exemption shields the first $50,000 of a primary residence's value from property taxes. The immediate first step of the proposal raises that threshold from $50,000 to $250,000 instantly. According to the governor's office, taking the exemption to $250,000 immediately makes roughly 60% of all homesteaded properties completely tax-free. The legislation then directs lawmakers to push that exemption toward $500,000, a level that would zero out the tax burden for roughly 92% of primary homes. Full elimination remains the stated end goal. Because this exemption is a fixed dollar amount and not a percentage of the property value, the math works in a very specific sequence. It zeroes out the tax bill for the middle class long before it delivers total relief to the wealthy. We can see exactly how this fixed-rate math alters outcomes by running the numbers on 2 different South Florida properties. First, a single-family home valued at $450,000, which sits close to the regional median. This table breaks down the ad valorem estimates for that median home. Under Phase 1, a $250,000 exemption delivers an immediate savings of roughly $3,880 a year. When the schedule reaches Phase 2, at the $500,000 mark, the taxable value drops to 0. That owner pays nothing on the value-based portion of their bill. For the everyday Florida homeowner, this policy works as an aggressive, early-stage intervention. They reach total financial relief within the first few steps. The mechanics look entirely different when applied to a $5 million luxury primary residence. Looking at the data table for this premium estate, Phase 1 yields the exact same fixed savings as the median home, roughly $3,880. Even when the state hits the $500,000 exemption mark, this owner saves about $8,700. It helps, but they still owe tens of thousands annually. The true payoff for this demographic requires waiting for full elimination. If the legislature reaches that goal, the luxury owner unlocks roughly $96,000 a year in savings. $96,000 is a serious number. That is the exact figure an executive relocating from California or New York will weigh against the massive tax exposure on the home they leave behind. The policy engineers 2 distinct timelines. The median buyer zeroes out their dough early. The luxury buyer waits out the legislative clock for the massive financial windfall that ultimately justifies crossing state lines. The legislation contains a specific rule for out-of-state arrivals. Anyone who establishes Florida residency after January 1, 2027 has to hold it for up to 5 years to qualify for these larger exemptions. Read quickly, it looks like a penalty. In practice, it operates as a behavioral filter, designed to screen out seasonal vacationers and property speculators. For an executive planning a corporate relocation, this 5-year clock acts as an accelerant. It forces them to buy and declare their homestead sooner rather than later, because the clock only starts ticking once the claim is filed. By rewarding permanent commitment, the state effectively turns a massive tax break into an urgent deadline for incoming wealth. Until the votes are counted, South Florida real estate requires a highly specific strategy based on your position in the market. If you are buying a primary residence, run your math strictly on today's tax levels. Even if this passes, the earliest any relief hits a physical bill is January 2027. If you are selling, the legislative calendar works in your favor. Every step the state takes toward tax elimination structurally increases the demand for your property. If you own an investment property or a second home, the homestead exemption does not apply to you. Your immediate risk is that local governments may raise the millage rates on non-homestead properties to cover the budget deficits created by this exact bill. A single piece of legislation is fracturing the market, creating highly distinct risks and rewards that depend entirely on how your property is classified on the tax roll. Before any of this impacts a bank account, it faces severe political hurdles. The proposal must first clear both the House and the Senate with a strict 60% approval margin. If it survives Tallahassee, it must then convince 60% of Florida voters in November. It will face fierce local pushback, warning of severe cuts to police, public schools, and vital infrastructure. The compounding financial benefits of this phase-out are staggering, but a property purchase made today has to be rooted in current reality, not in a future ballot measure. If you are making high-stakes decisions in the South Florida market and need to navigate exactly how these tax mechanics apply to your portfolio, Matthew Krinzman can run the numbers for your specific address. The demand for prime South Florida real estate will not wait on Tallahassee, but the ultimate cost of the Florida dream hangs in the balance.